Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So it was a bit dramatic speech from Jerome Powell yesterday, although Fed was not brave enough to change the rate in September, but based on the press conference and in the voting process, actually the members who have the dovish view do not have the majority in the committee. And based on the things that Jerome Powell said yesterday, we will take a look at this in details in our weekly reports as usual. What it means that at least the one rate change stands on the table, but I suspect that it might be even two rate changes in November and in December. Because obviously Fed can't not see the changing of the fuel prices and everything else that's going on right now in the United States economy, including the changing of the rate of the long-term bonds, I mean the yields of the long-term bonds, dropping demand for the bonds, and all the other stuff that we usually discuss in a weekly report. So that could explain the reaction. Yesterday it was really a big challenge to trade this setup right at the release moment, just because actually it always brings some surprises, and personally I prefer do not trade the Fed reports. So, and later I will show you what the problems really was with the trading. Meantime, on the daily chart, what we have bearish context in place. Yesterday has become the reversal bar, so you can see market create the new top and close below the lows of the previous candle. So it keeps bearish context. Our vital point around 107.30, 107.35 has not been broken, so market has not returned back in the consolidation. Although here we have mostly some kind of the sideways action, but take a look at the whole week market stands in range of this collapse, so it doesn't show any pullback. Nearest support stands around 106 area, as we said, and market right now is actually challenging these previous lows. So supposedly, if any pullback will happen, theoretically it should start somewhere around the weekly confluence, starting from the 106.11 or even slightly lower. So and on the daily chart here, market right now is flirting with the MACD. It could be formed some grabber or something of that sort. We will see what will happen. Well, in general, overall context remains bearish, and currently, if even we could consider taking some long position, but only on the very small time frames, somewhere under the hourly chart. For the considering taking the short position, we need to get some minor pullback here to consider taking the position somewhere with a proper stop somewhere above the stop. So this is just an idea on the daily chart. On the hourly chart, on the 4 time frame chart, take a look at what has happened. Market has retested this area. From technical point of view, despite all this doom and gloom with the Fed, this performance, if we suggested that we wouldn't know about the Fed, we just see the chart. From the technical point of view, everything just great. So some kind of the ABCD upward performance, retesting of the strong area, and collapsed. Downside acceleration. Now, speaking about the trading process, hardly you were able to take a position right there, just because it was very fast reversal. Although from the technical point of view, this was the proper area, and we talked about this actually with a few days already. So initially we considered taking short right here, then maybe yes, it also might be taken, but actually hardly it was possible just because of the speed of this reversal. At the same time, if we take a look at the hourly chart, recall what we talked about the trading in the hand and shoulders. We said if you would like to make the bet on the Fed result, you could try it, but you should understand what could happen. And trap was in both ways. For the bears, well, for the bears it was not just the trap, it's just mostly because the actual hand and shoulders even has not been formed. So you can see that market even has not reached the neckline. But for the bulls, if you have taken the position somewhere around this level, as we said, around 107.10, if you will see, the failure of the hand shoulders, and this definitely was the signs of failure already right there. The problem is that with this upward direction, the market hasn't quite reached the XOP. Just for the few pips to XOP, we've got around 107.45, but market has reversed down earlier. And that was another problem for the bulls. It's just, it's also sharp reversal, so you will probably not be in time to either to close the position or do something, and the chances for getting loss was really significant. That is the all actually problems when you're trying to trade the Fed reports or any other important data release. So if even you get the clear patterns and it seems relatively easy to trade it, it might bring some unexpected surprises. So it might be some preliminary reversals or something of that sort. So now what we could consider, we have thrusting down. It is interesting that here on FX choice chart I have the gap, but I have checked across the board on the chart doesn't have the gap, and on the futures chart we also do not have it. So I think that probably we should not consider it. Just I am talking for those of you who also use a fixed choice. So because the unfilled gap, as you know, it's every time some really headache for the traders, especially it stands relatively on extended distance. Now we could focus on this thrusting down action, and we could get the bread and butter sell pattern somewhere from the either 106.60 or maybe slightly higher, whereas the 50% 106.77, whereas we actually have natural support resistance zone. As you can see, this line previously this was neckline, this was also resistance, breakout, support, breakout. Now it's once again will be resistance, so it stands accurately around the 50% level. So somewhere from the 62 106.75 it's probably will be an area where a bread body could be formed, and that will be the chance for taking the short position, because bread body provides more or less good probability to finish the trade at least with the break-even result. So because momentum here stands strong and some downside minor response should happen, that should let us to move stops to the break-even. So that's the idea, and then we will see if market will go down, as we suggest, somewhere to the 106 target. That's okay. This is actually what we would need to. If not, if it starts flirting around, breaking 106.75 area to the upside, in this case, it would be better to sit on the hands and do not take any new shorts. Just see what will happen. So because that might be already the reaction on the weekly conference. We will see. That's in 2 words that we will keep an eye on.